The EU-China Comprehensive Agreement on Investment took 7 years of negotiations and was finally agreed in principle in December. Europe said it was the most ambitious trade deal that China had ever signed. But it's yet to be approved by lawmakers in the European Parliament. The Vice President of the EU Commission said last week that efforts to get it ratified have now been suspended. It follows tit-for-tat sanctions imposed over China's treatment of the Uyghur population in Xinjiang province, which the United States has described as genocide. Washington imposed sanctions on several Beijing officials in March, and the European Union followed with its own measures targeting 4 Chinese officials. China retaliated by sanctioning 5 lawmakers in the European Parliament.
At the end of the day, the ratification happens at the European Parliament. So, in a way, the target was somehow of the sanctions too involved in the decision to ratify.
Analysts say tensions between China and Europe over Xinjiang and the crackdown on the pro-democracy movement in Hong Kong mean ratification of the trade deal looks unlikely anytime soon. Germany's leader said the deal should not be abandoned.
Despite all the difficulties that we will certainly encounter in ratification, it is nevertheless a very important initiative that opens up greater reciprocity in access to our reciprocal markets.
The agreement was meant to open China's huge market to European companies. But from the beginning, some European lawmakers saw the deal as deeply flawed.
Every single piece of market access that Europe was getting, when you read the details, is actually not as big.
The investment deal is a key part of China's expansion plans.
Europe is kind of the one and only big developed economic area that where China can still buy companies.
Beijing is pushing Europe to ratify the agreement.
China is willing to communicate and cooperate with EU to promote the realization of the deal as early as possible to benefit people from both sides.
Meanwhile, the EU this week unveiled plans to block foreign companies that are supported by state subsidies from buying European businesses or bidding for public contracts. Analysts say that would impact Chinese state-backed companies looking to expand in Europe. Henry Ridgewell for VOA News, London.